Joe Cusick of Money Block joins me now for the Wednesday morning money rundown. Let's take a look at that trader rundown now, Joe, because we are getting closer to the jobs number coming out on Friday. We have the ADP number today. What do you think the market is setting up for here?
First of all, more volatility, and second of all, I think that the bears have gained some traction. The technicians were completely caught off guard yesterday. We saw that in the action across the board.
But it didn't feel like a panic sell-off, I have to say.
No, I wouldn't say it's panicked, but it was something where you saw the bulls had some momentum. While the overall environment is still bearish, there was upside. People were looking for upside. I think I've even heard you speaking earlier this week that 2000 was going to get challenged. Well, there we were at 1900. That is extremely negative, wasn't expected. And that has become more of a norm, as the unexpected going into all these different types of events so far this year.
What's the next level in the S&P 500 that we have to worry about, Joe?
1850.
1850.
Right, because that's been the pivotal point, the point of control that everyone had watched previously on the pullbacks. That's the level we want to watch. You know, again, with the fundamentals looking mixed at best, watch that level.
We are in the midst of earnings season, and Pepsi's coming out with earnings. What do you see in the options paper? What's bubbling up?
Oh, I love that one. That's a good reference. You know, Pepsi is one of those consumer discretionary type of products. And the bottom line is the consumer is under a little pressure. I've seen that the consumer discretionaries have been underperforming. As a matter of fact, I saw earlier this week a lot of put activity.
They're nervous.
Yeah, they are getting nervous. I mean, you're looking at the February expiration right around that 96 level where they're buying some puts. These are out of the money puts. So, you know, when you see 4,000 or 5,000 contracts trading at a time, that is an indication that this is a short-term hedge. Right? You only have about 16 days left until they expire. That's nervousness. And with volatility increasing, with the uncertainty, with the continued, with results that are mixed, and then they're forecasting lower, you have to be a little bit on guard. Pull back your size is what I'm going to tell you to do.
Yeah, that's always your good advice.
Yeah.
Well, good to have you here. Thank you, Joe.